hey, make it plain for me. Break it down for me, all right? Don't try to confuse me with crazy answers. No. In today's conversation, I want to give you the top 10 business loan questions and answers you must absolutely memorize for quick and easy loan approval. I want you to memorize these questions. I want you to memorize the answers. All right? Don't you go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great and blessed as I am, go grab a cup of coffee or tea or vodka. Now let's roll. In today's conversation, I want to share with you the top 10 business loan questions and answers you must absolutely memorize for quick and easy loan approval. Before we get into the top 10, let me first say that business loan interviews can be hard to answer sometimes, especially if you're a startup or just a small business. But one thing I want you to really remember is I want you to make it plain, what I call country logic. Break it down for me. When you talk to the lender, I want you to use simple words. Don't try to razzle dazzle the lender with fancy words, trying to confuse everybody else. No, saying, I am in a specific niche. Here's my business plan. I have this sort of convoluted phrases. No, hey, boss, break it down for me. Break it down for the lender. I want you to make things very simple. Make it plain. All right. And the whole thing here is that you have to understand when you're filling paperwork, the lender is trying to gauge the risk. They're trying to see the default risk. They want to make sure that you have the ability to pay the money back. That's all it is. Because the lender doesn't really care about your profile. They just want to make sure they get paid. Because you have to understand, if I'm a lender and I'm giving you money, right? You are coming to apply for a loan and business loan, whatever. And when it comes time to pay me back, you start playing games. I don't hear from you. When we call you, we don't see you. And now I have to actually hire a collection agency to track your sorry and broke ass down. Think about that. That's just a waste of time. So the lender is trying to really mitigate risk, okay? And banks conduct interviews for business loans in the first place because they want to make sure your business has the financial stability to make loan payments on time, that your business has a track record of successful spending, borrowing, and positive cash flow. It's all about cash flow. And you, the owner, have the finances or assets to cover the loan if your business goes bust. This is all about risk mitigation. They're trying to cover their ass. That's all it is. Okay. And one thing I want you to understand is that if you want to ace a business loan interview, you want to know your business plan inside out. You want to research your lender and your interviewer. This is important. You want to hold a mock interview. This is why you're watching this show, because you want to have a clear idea of the top 10 business loan questions and answers, right? This is what it is. You want to have the relevant documents on hand. This is kind of important. And while you go to the bank's branch, or when you have the interview on the phone, you want to take along visuals. Okay, I'm talking about photos and even videos. Okay, everything that really boosts your application. You just want to have it. And last but not the least, be confident. Okay, you want to practice power stances, get enough sleep, wear your lucky socks, whatever you have to do, folks. Whatever you have to do, I want you to do it to be in the right mindset. Let's get in the top 10. So the first thing you need to do is you need to summarize. The question they will ask you is, summarize your business for me. See, when the lender asks you this question, they want to just have a clear idea of how you make money. Big decision time. Can you summarize your business for me, boss? Talk to me about your business. I'm not asking you to really give me a 2-hour pitch. No, I want you to tell me a 1-minute pitch about your business, how your business makes money, how the whole thing is monetized. That's just all it is. Okay. First question, summarize your business for me. So when you hear that question, please, I want you to be brief. Be brief. Be clear. As I said before, don't try to razzle dazzle the lender with fancy words, with complicated phrases. No, listen, I don't need no almanac to read your business plan. Okay, I don't need a glossary. I don't need a dictionary. Don't try to confuse me or waste my time with complicated words. Be clear. Be plain, make it plain, break it down for me. Make it specific to your audience, okay? If you have a lender in, let's say, in the IT industry, you want to use words that resonate with that lender, okay? You want to highlight your benefits. What is your business bringing to the table? Talk to me about those things, folks, okay? Boss, I'm talking to you. Did you hear that? I want you to highlight the benefits of your business. Don't just try to tell me your business is making money doing this and doing this. How are you adding value? Hey, talk to me about that. Okay, you want to identify the problem and your solution. What is the problem you are actually addressing in the industry, and what is your solution, and how is your solution different from your rival solutions? Okay, this is what it is. So when we're talking about making a clear pitch to the lender, you want to make sure the lender understands that you know your stuff in and out. Okay, you want to make a compelling call to action. So you tell the lender, hey, listen, I have the solution. I think I need the money to actually implement that solution. You want to extend an invitation to continue the conversation. See, it's not just about getting the loan. It's also having a conversation, a dialogue, where you see all the stakeholders are in the place and they're giving you the money you need. Okay. So number one, the first question is summarize your business for me. It's not a question. It's more like an invitation to explain. The second question or a statement from the lender will be, tell us something about your credit. See, here they want you to talk about your personal and business credit. So you want to start with your personal credit, okay? Make sure that, and the question can be, can you tell me about your personal credit? Make sure that you have a clear idea. If you have bad or fair credit, you want to have let's say an explanation of how you got there, okay? Boss, are you hearing me right now? If you have let's say a 545 FICO, explain. You want to contextualize how you got there. Okay, you want to have the reason. You want to explain, and it's not about the bad FICO. It's about the explanation, the rationale, and that's the same thing. If you have a business credit and you have poor business credit, trying to explain it. What happened in the first place. So make sure you have a clear explanation when it comes to your business credit. All right, because this is important. This is really important. Okay. The third question is, do you own or rent your building? This is important, okay? And the whole thing here is that, see, the lender is just trying to make sure that you have, you're going to be around you're going to be in the neighborhood for a long time, right? Because no lender wants to have a volatile borrower. They want to make sure your ass is going to be sitting in the neighborhood for 5 years, 10 years from now. Because think about it, if you own your building, chances are you are more established than if you rent, right? But I'm not sitting here telling you that renting versus leasing, one is bad or one is good. It's all about financial stability, because the lender wants to make sure that if you own your building, for example, you have assets. Get that? Assets, and those assets can be collateralized. You can use it as collateral for a loan. You can collateralize a loan with the asset that you own. And if you rent, the lender is going to look at the lease term. How long how long is the lease term for? Is it 5 years, 10 years, whatever? So the whole thing here is that the lender is trying to establish your solidity. Okay, how solid you are. Money. Because at the end of the day, it's all about money. Boss, did you hear that? If the lender asks you whether you own or rent your building, he or she's trying to find out if you are financially stable, okay? And they want to see the amount, how much you owe, how much you're paying every month, and if you have a mortgage on your building, all that kind of stuff, okay? So there are factors to consider when making the lease or buy decision, but we're not here to talk about that. I just want to say that when the lender asks you that question, you understand that, hey, listen, it's time to really clarify things. One thing you need to understand is that you want to actually understand that if you buy versus lease, if you buy, for instance, you want control of the property, you can consider the long-term cost. For some businesses, such as retail and service businesses, location is important, right? Location. So if you own or rent your building, as I said before, let's say you own your building, chances are you're going to be around for a long time. And you know what? Lenders love that. They love stability. They love stability. They don't want a tenant that actually a business tenant that just moves out every 2 years or whatever. No. Okay. So one thing I want to say here is that when you hear that question, you want to think about how to word the answers in such a way that you are telling the lender, hey, listen, I'm here to stay for a long time. I ain't going anywhere. I ain't going anywhere. Okay, so you want to tell the lender, hey, I've been here for maybe 5 years or 10 years. My business is rooted in the community. We are involved in a lot of things. I have a lease, or I have ownership on this property, and that's what it is. Question number 4, folks. If the lender asks you, why does your business need a loan? That's a good one, right? That's a good one. So basically, the lender wants to know the use of loan proceeds. So you can hear, if you hear this question, you know that the lender just wants to understand that, hey, listen, you need the money for something, okay? But how are you going to use the money? And how are you going to use the money in such a way that you generate more revenue? Because the thing here is that the lender doesn't give a about revenue or assets. I mean, they do care though, but not as much as cash flows. The lender gives a about liquidity, about cash flows. Hey, boss, make it plain for me. Break it down. I want you to tell me how you're going to make money with the money I'm giving you. That's what I'm talking about. I don't care. Listen, I really don't care if you have fancy balance sheet analysis. You know, you just hire a CPA to break down to sort of explain your balance sheet, all that kind of stuff. It's good. Don't get me wrong, but it's not as important as if you tell me how you're going to make money, because the bottom line is I want to follow the money. Lenders follow the money. Okay, how are you making money? How you're spending it, cash inflows, cash outflows. There is a statement called the statement of cash flows, okay, where you have 3 categories. You have what? Statement of owners, statement of cash flows from operating activities, cash flows from investing activities, and cash flows from financing activities. That's what it is. Okay, boss? This is what it is. So next time you hear that question, why does your business need a loan? They're asking you how you're going to use the loan proceeds. You can use the money for everyday operations. You can use the money for equipment, machinery, tenants improvements, inventory, debt refinance. You can use the cash to acquire a business. You can use the money to start a franchise. You can use the money for startup costs if you are a startup. You can use the money to expand an existing business. You can use the money to stay competitive. You can use the money for enhancement. What I'm trying to tell you here is that whatever reasons you choose to give, make sure that you can back it up, and make sure that you can explain how that reason will help you generate more money. I'll give you an example. Let's say you want to buy equipment or machinery. You can say this equipment or machinery will help me boost productivity, especially during the peak seasons. I will serve. I'll be able to produce more items to deliver my services faster. Okay. And this will help me tackle seasonality. And for instance, if you want to expand your business, you know that expansion will actually translate into higher revenue. Okay. So why does your business need a loan? You better have a clear answer to that question. Number 5, why should we approve you for your business loan? This is a good one, boss. This is the good one. So when you hear this question, what do you do? So what is the lender trying to ask you first? The lender is trying to ask you, hey, listen, we have let's say a diversity, a variety of business loan applications. Why should we approve your business loan and not the business loan of your rival? That's what it is. So this is a critical question. You need to be assertive here and conservative at the same time when giving your answer. So the lender is just trying to make sure that you know exactly that you are confident enough to want that money and you know what to do with that money, okay? And you've already explained why your business needs a loan in the first place, right? This is what we talk about, use of loan proceeds. Now, when you answer the question, why should we give you your business? Why should we give your business a loan? You want to actually be consistent, but you want to be forceful. Money, money, money. Money, money, money. The only difference in answering this question is the money. You need to provide details. You need to explain why you are the best candidate, why you are the best borrower, why your products are good, why your services are good. Did you hear that, boss? Make it plain. Make it plain, make it plain. You want to really, really break it down and then explain. This is your pitch. But this is more than your pitch. This is really, really you trying to say, listen, I am the best at what I do. And if you give me that cash, I will do better. Okay? This is what it is. So please practice your explanation. Make sure that you give a very detailed explanation. Not give anything vague like I do this, I do that. No, I am the best in the industry. I'm number one. I'm number two, or I'm number three. Customers comes to me. See, this is the kind of line that really impresses lenders. Okay, so question number 6: do you have insurance? Now, if you have insurance, or they might ask you, do you have insurance? If you do, which ones do you have? See, the banks is trying to do 3 things here. 3 things. They want to know what kinds of insurance you have. In other words, they're trying to see if you comply with the regulations and the practices in your industry. That's number 1, compliance. Number 2, they want to check your business credit, because if an insurance company has actually trusted you with their business, that means that you must have a decent credit, right? So the banks is trying to make sure, hey, okay, this business is working with this insurance company, blah 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 blah. So this is great. And the third thing is, have insurance. If you have insurance, you basically tell the bank that you are okay in terms of liquidity. In other words, if you're able to pay insurance premiums, you must have some cash. So the bank is really trying to gauge 3 things. Okay, and so make sure that you always practice this question, because you are going to have it. You should always expect this question. Very important. And please practice your answers. That's all I'm just trying to say. And try to carry all the insurance documents you have when you go to the loan interview. Number 7, how long would you need to pay back your loan? That's a question we hear all the time, and you should expect it. Okay, so here the bank is asking you about the tenor, asking you about the term of the loan. Okay, now when we talk about the thing here, to answer this question strategically, you gotta have you need to back up your answer with numbers and research. Don't tell me I need the money for 3 years. Why 3 years? Hey, why? Why not 4? Why not 5 years? Why not 6 years? Okay, be clear here. Okay, so you want to go to the loan interview where you have a clear idea of, I need the money for 36 months because I'm going to be making money with this, and that. That's the kind of stuff I want you to have detail on. Okay, don't just throw a number like, I think I should be good with 5 years. No, boss. You want to really have a clear idea of why you need the 5 years. Big decision time. Have you thought about the maturity of your next loan, your next business loan? Have you thought about that? Have you actually sit down and had a conversation about, let's say, the pros and cons of 3 years versus 4 years versus 5 years? This is the kind of stuff you need to have, okay? So how much time will you use to repay your loan? This will depend on your income statement, your balance sheet, the financial profile of your business. Because if your business is doing great, why do you need 10 years? If your business is doing great, you just want to repay the loan maybe in 2 or 3 years. But if your business is currently lethargic, then you might want to think about maybe extending the business loan to maturity a little bit, like, probably around 4 or 5 years down the road. It's all about business strategy. It's all about liquidity management. Question number 8: what type of business are you involved with? This is really good. This is a good question, because the lender is trying to understand your product lines, trying to understand how you make your money, the kind of products or services you offer. Okay, and please, again, here I just want to repeat it here. Make it plain for me. I don't need a glossary to understand what kind of business you're involved with. I don't need an almanac. Okay, tell me exactly. You want to tell me how you make money in a very simple way. Okay, what kind of business? What is your product line? Do you have product lines? What are we talking about when we talk about product lines? A product line refers to an array of related products under the same brand. In other words, a product line is a collection of similar products that are sold to customers. Okay, and products under a product line can be related by functionality, target market, price range, or brand. Okay, and you want to think about product line depth. The depth, not the depth. The depth refers to the number of products offered under a product line. So when you think about answering that question, what type of business are you involved with? You want to really have a clear idea of your product lines, of the different products you have, or the services you actually render. Don't go anywhere. I'll be right back right after this. Don't go anywhere. Welcome back, folks. So we are still having a conversation about the top 10 business loan questions and answers, okay? And question number 9, how do you explain any past business failures? So here, the thing here is that you need to explain any financial hardships that may set off alarm bells. Remember, the lender is just trying to cover their ass. When they ask you this question, they just want to cover their ass. They might say, we have noted some past failures with your business. Would you mind explaining? So the first thing you need to do is to acknowledge the failures and take full responsibility, okay? So this will give an impression of responsibility, but hey, that's not enough. You want to provide details of what happened and the steps you took to sort out the issue. You should go ahead and explain the processes you have put in place to avoid such failures in the future, okay? And one thing we need to understand is that when the lender is asking you this question, they just want to understand your responsibility, your accountability processes. Remember, when we talk about business, it's not possible to avoid failures. Everybody fails, okay? But that doesn't mean that your business is set to fail. As long as you have the strength to fight back up, your enterprise may be deemed fit to acquire the loan, to get the loan that you are interviewing for, okay? You want to show the lender that you have learned from past business failures. That's what it is, okay? Big decision time, big decision time. Have you learned from your failures in the past? Are you currently dealing with business failures? Talk to me about those things, because there are a lot of things you can learn from a business failure, okay? Don't play the blame game. I said before, take responsibility. Don't beat yourself up either, okay? Don't double down. If you are in a sector that doesn't work, you want to get out of that sector. Get out. Why are you wasting time on a sector that is a loser? Nobody wants that. Give customers what they want. It's important. Be willing to let it go. Sometimes, stuff happens. Your business has had setbacks. It's okay. It's okay. Learn from the lesson. Learn from the experience rather, and just move forward. Okay. And you want to bring in experts. You can tell the lender, hey, listen, this is how I have solved the problems that I had in the past. I brought in experts. I had people with me to explain to me what happened and how I can fix that problem. And please, you need to get your hands dirty, okay? What I'm trying to say here is that you want to be there yourself. Boss, if you are a leader, you better be there and show your team how it's done, okay? Don't try to just hire consultants and say, listen, y'all just take care of this and y'all do it down. I'm just sitting here just watching it. No. You want to talk about how you raised enough money in the past, or how you want to raise enough money to solve the problem that happened, the problem that caused the failure in the first place. If it is a monetary issue, then talk about it. And or you can even talk about the lack of passion at the beginning, or the lack of commitment. Bottom line is, you want to word your answer in a clear way, but you want to show the lender that you have taken responsibility, okay, and now you are committed to making sure that business flourishes again. Question number 10. Give me a history of your accounts payable and accounts receivable. Yeah, boss, you better be clear that you're going to get this question. I don't care, if your business is small, if your loan is small or large, they're going to answer that question. Now, if they're asking you, can you show me a clear history of your accounts payable and receivable? They're asking for a deep analysis of your balance sheet, especially your short-term assets and short-term liabilities, because that's what accounts receivable and accounts payable are. Accounts receivable are short-term assets, and accounts receivable are short-term assets, and accounts payable are short-term liability. In other words, those are due within 1 year. This is what it is, okay? And one thing you need to understand is that the lender wants to understand how you manage your customers and suppliers. Are you giving enough? Are you giving too much credit to your customers? Do you have enough liquidity to pay your suppliers? Because your suppliers are the lifeblood of your business. They are quintessential to your business's success, okay? If you don't pay your suppliers, you ain't got no business, all right? Don't confuse, don't get it twisted here. You just want to understand, if your suppliers are not satisfied with your service or your products, with your payment history, they're just going to drop you. Do you have enough net 30 vendors? Do you have net 45 vendors, net 15 vendors, or do you pay everything in cash? This is important, okay? So you need to have a clear understanding. So the difference between accounts payable and accounts receivable, it's just all about money, okay? Accounts payable, money going out. Accounts receivable, money coming in. That's all it is, okay? So this is where you have an interrelation between the balance sheet, where you have assets and liabilities, and the statement of cash flows, where you have money coming in and money coming out, money going out. Okay, so the bottom line is when when they're asking you, give me a history of your accounts payable and accounts receivable, you better have documents, and you better have documents. Okay, you need to explain to the lender how you manage accounts payable, how do you optimize accounts payable. Okay, how do you make sure that you pay them on time? How do you make sure that you have a strategy in terms of liquidity? Make sure you have documents. It's important. And explaining how you are able to collect past due accounts. This is important because it tells the lender that your business is solid enough not only to collect debts, but also be able to have a good relationship with customers. This is really important. All right, folks, this is it for today's conversation. I was talking to you about the top 10 business loan questions and answers you must absolutely memorize if you want to get your loan approved right away. Number 1, if they ask you, summarize your business for me. Number 2, tell us something about your credit. Number 3, do you own or rent your building? Number 4, why does your business need a loan? Number 5, why should we approve your business loan? Number 6, do you have insurance? Number 7, how long will you need to pay back your loan? Number 8, what type of business are you involved with? Number 9, how do you explain any past business failures? Number 10, give me a history of your accounts payable and accounts receivable. Thank you so much for your attention. I really appreciate it. I'll see you next time. But until then, remember, stay marvelous.